we build smart financial contract-based infrastructure for banks and regulators. Our ecosystem comprises of universities in Switzerland, development partners in the US and in India. We have clients out of Switzerland, incubator, Thomson Reuters out of Switzerland. In order that I explain what this smart financial contract is all about, I have two use cases for you. The use case one is smart financial contract technology to assess capital adequacy for NBFCs in India, a very relevant case for today. In order to start analytics on Ariadne, we don't need to look at the data warehouse data, but just learn basic information about contracts, such as the agreement terms, for instance, the type of contract, the start date of the contract, the end date of the contract, the day count method, and so on. This is of no hassle for NBFIs to provide. Here is where the smart financial contract logic kicks in. In Ariadne, such information is converted into algorithms. When we trigger such an algorithm, this is what we have. What we look at right now is a mortgage contract with all the formulas that exist within a core banking system, replicated on the analytics environment. So, here are the principal cycles, the interest cycles, and the event series of this mortgage deal. Let's look at a savings contract now. These are the deposits, the interest capitalization events, and so on. By the way, the list goes on. We can not just model fixed interest instruments, but also derivative contracts. With such a strong data foundation, the NBFC can plug in their data into our pre-programmed models, such as capital assessment models, behavioral assessment models, even forward-looking budget models. The analyst can even build his own models using our workflow. Such a representation of a financial contract is termed an algorithm because this algorithm is alive and it lives outside the core banking system. At Ariadne, we plug in these algorithms to live market feeds such as yield curve information, FX rates, stock prices, commodities, and so on. An analyst can now use this information to set up his market shock, for instance. Build what-if scenarios, such as, what if the interest rates changed by 1%? What if the long-term rates increase more than the short-term rates? He can even couple this shock along with an FX shock or a commodity shock and so on for his entire portfolio. And this is how a stress-tested portfolio of an NBFC financial statement looks like. One can generate value views. For instance, they view their portfolio on various levels of the balance sheet in terms of fair values, nominal values, IFRS, LGAP, under all the stress-tested scenarios. One can even view liquidity on not just the aggregated top level, but also sub-levels. One can even drill down to a granular level. For instance, the example of this mortgage deal that has all the events that bring into the balance sheet. And this is possible because we recreate those algorithms on our analytics platform. This is a huge step ahead. Unlike other ALM tools out there, Ariadne just requires basic information to start analytics, thanks to our smart financial contracts. The second use case I have is Ariadne smart financial contracts for the regulator. Currently, banks provide data to the regulators in the form of reports such as CSV files and PDF reports, which get into data heaps, and analytics on such data requires a lot of manual work. What if, on the other hand, the regulator used a smart financial contract technology? By the way, for regulators, our smart financial contract technology is open source. The regulator can gear up risk analytics to a whole new level. This is a demo. For instance, a bank has probably submitted their data to the regulator in the form of our smart financial contracts. The regulator would perform an end-of-day solve for this bank. The regulator can generate gross exposure across various industries. Then break it up into gross exposure across regions. Then across probably rating. He can even generate net exposure. He can even run a heat map. The red indicates that the exposure is low. The regulator can even generate the losses for this bank given a default situation. Ariadne smart financial contracts would be a great technology in the hands of a regulator. Smart financial contract technology of Ariadne is fast because it is machine readable code, unlike the data warehouse. We can solve up to 3 million contracts in just about 16 minutes by using a 16-core processor. And we can cut costs by 60% for banks using this technology at the analytics. Technology is open source for regulators, but we have a pricing based on modules. For instance, an NBFC would use few of our modules. For instance, the liquidity assessment and so on. We have a modular pricing for them on the analytics platform. A bank might want to do interest rate shocks, probably more deals such as swaps and futures and options. We have a different pricing model for them, and so on.
A follow-up. For the regulators to use this, do they need the banks and the NBFCs to actually use part of this platform?
Yes, this is a big step forward. We not just talking this out of our thin air, but regulators are really looking at this solution as the next best solution that they can use. We are working with the regulators in the US. Actis is the foundation, not-for-profit registered in the US, who are working along with CFTC and some of the organizations there. We are working with ECB. Report Once is one of these initiatives with the European Commission. They believe that a lot of data gets submitted to the regulators over and over again. But if they represented this in the form of an algorithm, then the reporting would happen just once in the life cycle of a client. And the information that they provide the next year is only edited or implemented.